Good evening and blessings out there, everybody on Facebook. What's going on? It's your man, Rod Hickman, Generational Wealth Builders, where poverty ends with us. Listen, super excited to be coming to you on this Saturday spring evening. Just wanted to get on here for a few minutes and chop it up with you all. Like I told you, whole lot of things going on in the GWB world. We have a lot of moving pieces, have a few new hitters that are coming up and starting to do some amazing things. So we're super excited about what they have going on. And that's really been taking up a good bit of our time. But again, I love being here. I love being able to share with you, those of you all that follow us. Again, I'm so grateful for you. So I'd ask, please like, share. Rod is on. I ain't going to be on long. That's the lie I always tell y'all. That's the lie I always tell. But again, here tonight to talk a little bit about some situations that are going on. And tonight, and so with April being financial literacy month, right? We have to talk about some stuff. Now I know a lot of y'all like, oh man, here we go again, talking about the darn life insurance. Yes, because we need to talk. I'll share this with you. So I was talking with one of the agents, one of our newly licensed agents, might I add, talking with her on Friday, and she was telling me about an individual that we had spoken with about getting life insurance. And the individual was like, well, right now I can't really afford it and things of this nature. And again, we don't push. Listen, you know your situation. That's what it is. The lady would end up telling the agent that, hey, my husband just got in a bad car wreck. Thank God he's okay for the most part, but there are two other people that are not. And this kind of got at me, right? Because I'm glad that he's okay, but there are other people that are not. And I say that because I think a lot of the times we take for granted the fact that we're able to leave our home and we're like, I'm going to leave home and come back the same. We never know what we're going to encounter while we're out and about. And again, please trust me, this is not a fear tactic or anything like that to get people start tripping and start saying, oh no, Lordy, Lordy. None of that. That's not what this is. What this is designed to do is to get us to think and make sure that we are prepared. Now, with that being said, most times when I talk with people and we see how much life insurance they have, most people, by and large, have less than $100,000 worth of life insurance. And so on today, what I want to do, I want to simply take you through the format that we take our clients through. Because ultimately, I want you to make sure that your family is properly protected with the right amount of life insurance. Listen, having the wrong amount of life insurance is literally doing you a disservice. And so I want to empower you, the listener, you out there that may say, well, hey, man, I got it on the job. Remember, we've already talked to you about that. Unless you plan on dying when you're on your job, when you leave that job, you leave that life insurance policy, right? So let us not forget that. So you literally can't really count that life insurance because, again, and especially with the number of jobs that are laying off. FedEx just laid folk off last week. Apple is laying folk off, right? So again, there's a lot of insecurity in the job market right now. So putting all your eggs in one basket, thinking, oh, I got it on my job. Listen, if that job leaves, then what are you going to do? And what most people don't understand is that when you get what we call a permanent or personal policy, you lock that price in. So if you get it, the earlier you get it, you lock it in at that rate and it does not go up, right? And so that's what we encourage our clients to do. Even though you have insurance on the job, consider that as supplemental. Consider that as gravy on top of the taters, right? So, but really what I want to get to is help you understand the amount of life insurance that you need. And the way we calculate that is by understanding four primary categories. And this is nothing new that I haven't taught beforehand. But there are four primary categories that you really need to take into consideration when you are looking at purchasing life insurance, right? And we call that the DIME model. That is industry specific, right? industry specific. Now, when you look at the dime model, there's a reason why we use that, right? And so we'll go through that. So let me share my screen real quick. And again, if y'all have any questions or comments or anything like that, y'all just hit me up in the chat. I'll be more than happy to answer them. All right. So as you can see by my screen here, we have what's called the dime model. And what the dime model does, it allows you to be able to understand based on your needs, your requirements for how you want to make sure that your family is taken care of. It allows you to be able to know what that number is and understand so that the family knows what the money is for. Now, so let's go through these. So the first thing I want to let you know is we need to make sure that the husband and the wife are insured. I can't tell you how many families we talk to, and the husband is like, oh, no, they'll put most of the insurance on me because I'm the breadwinner. And I tell them, fam, let me help you understand something. God forbid, but if something happened to your wife, man, do you realize what you're going to have to do? Things that maybe the wife was doing that you didn't even account for, bro. No, so we need to make sure that y'all are equally protected. Now, let's go into it. So when it comes to debt, what we must understand is if you pass and you owe creditors, they can actually tie your life insurance up in probate court. I'm going to say that again. If you owe creditors, if you have debtors that are out there, they can literally tie the death benefit up in probate court. Now, what are we talking about? Now, you can't plan for everything. That you can't, but you can plan for enough. What do I mean by debt? Student loans, these little payday loans that you get, any kind of credit card debt or anything like that. Any kind of debt where the creditor can go and say, hey, Frank owed me so and so and so and so, and they can prove it, that's going to get it tied up in probate court. So you always want to make sure that you have more than enough insurance to ensure that if it's not going to get tied up in probate. So let's just say we look at the husband, we say, okay, bro, how much is your car? How much credit card debt do you have? What do you have in student loans? And he may say, well, man, all of that is about $100,000. Sweet. At least we have that $100,000 set to the side so that, again, if God forbid, if something did happen, the family wouldn't have to have their death benefit held up, right? Because we want to make sure that we get the family the funds as quickly as possible, right? Now, here's what I'll tell you. And I'll just give you this example, God forbid, but if somebody goes into the hospital and, you know, they're stuck in there for a long time and they run up, I'm just going to say $2 million worth of debt, the insurance company going to probably be, the hospital be more or less like, well, we're going to declare them as being indigent, meaning they can't pay for it. And so it'll get released. But again, you still have to know that your debt will cause your life insurance policy to be held up, right? Depending on the amount. All right, we go to the next one, income replacement. Now, in a two-family home, this is critical because y'all always hear me use the example. So if you have a husband and a wife, and if both of them make $50,000 a year, that means that their household budget is about $100,000. And why is that important? Because if you take one of those incomes away, that home is now in bankruptcy. That home is now in poverty. Why? Because ain't no way you can stretch 50 to become that $100,000 or 80 after tax or whatever you want to call it, right? So what we want to do is life insurance allows you to be able to say, okay, I can leave numerous amount of years of my income behind so that my loved ones can still function. They still have a budget to function on. Hope that makes a little bit of sense to you. So let's put it in some numbers. So let's say that the husband's income is $50,000. And what we'll do is his income is $50,000. If he wants to leave 7 years of his income behind, then that means we need to leave $350,000. Does that make sense? If he say, I want to do 10 years of my income, that's $500,000. And so what is this based on? This is based on how you want your family to fare, God forbid, if something should happen, right? So let's just say they say, nah, man, I want to leave 7 years of my income. Okay, sweet. So that means this right here would be $350,000. Okay, sweet. So now the next one is your mortgage. You want to make sure that the mortgage get paid off. Why? Because here we go again. When you lose that annual income, again, now things start happening. So now you're able to basically turn around and pay straight away off your mortgage. Your mortgage is paid off. So now all your family has to do now is just pay the taxes on the home, right? Now, basically, let's say the mortgage is, or let's say that they owe about $250,000 on the home. I'm just going to use that number there. Or let's just say 175 is what they own. Whatever the case may be, that's what we put there. Now, I know there are those out there that say, well, hey, Rod, I don't have a home. I don't own a home yet. Hey, man, what about me? I'm renting right now. Well, again, the same question that we ask our clients are, okay, how much how much of a home would you like for your loved ones to be able to go and purchase, God forbid, if something should happen to you? How much? So you're able now to say, well, I want them to have $200,000. And if they can't make it work with that 200 grand, then that's just on them. Okay, sweet. What you've done now is you've now allowed them to be able to go and buy their forever home. And so, and this is especially critical if you have young children, right? Again, if you have a wife, you want to make sure that she's not having to go back and live with mama and stuff like that. Or if the husband, you have to go back and crash with mama. So that's what the mortgage payoff allows that to do. And again, even if you're a renter, it's still important and even more important for you to have life insurance because you want to make sure that your family has their forever home. Now we get down to the last one. The education is basically if you want to pay for your children's college, right? You want to pay for their children. You want to create that educational fund, or maybe you don't have children, and you say, "Hey, I want to put some money so that my spouse or my loved one can basically fund their retirement." Right? They can put that money toward retirement, or you can say, "We have children. We don't think they're going to go to school, but we want to create a fund where if they decide to go in business, they got money to go into business," right? Hobby, ever investment, whatever you want to call it. This is where we account for that, right? Because again, in doing this, it's the worst case scenario, right? That's what we go with. So let's just say in this example, he's like, yeah, I got one son. He's 7, and I do want to pay for his college. Average 4-year degree is about $150,000. So what we'll do is just put $150,000 per child. So now we're down to the nitty gritty. So what happens is now based on these needs or these requirements, now we see that this individual needs about $800,000 worth of life insurance. So now what we have to focus on is understanding that you need the 800,000. How much do you have in your budget? And so this would be where we would sit down with the client and we do what we call a financial lifestyle strategy report, where we basically go through and help look at your budget, see where you have some discretionary income, see where you have some monies where you could put here, put there, whatever the case may be, right? That's what we work with our clients on to make sure that you can still put cheese on a waffle, right? We don't want all your money to go to insurance. We want to make sure that you're still able to live. All right. Now, and then we get that budget. Now, I hope you understand that is how you know how much life insurance you need. And so I hope those of you that are watching, I hope those of you that have tuned in will take the time to sit down and go over that, right? Again, what we do here, we want you to be informed, right? It costs nothing to be informed, but we want to make sure that you're informed so that you are properly protected. You cannot be properly protected if you're not informed. So this brings up another point, right? And I was talking with a good friend of mine today about that. the mindset. That's something that we have to work on. We have to work on our mindset. And why is that important? It's important because something that I hear people saying far too often, something I hear people saying far too often is, well, nobody left me nothing. I don't understand that language. One, from a man. I don't understand that from a father. I don't understand the father that would say something so, I don't know the word that I can say on public, but I don't know a man that would want their family to be struggling and scuffling with his last name. I don't know one. I don't know a man. I know some little boys or whatever you want to call them. But either way, I'm not judging. I'm just saying. But he was talking about, and I've heard this quite often, nobody left me nothing. Why I'm gonna leave them something? That is a poverty mindset. It is a pure poverty mindset. And it's quite selfish because I remember when Lil Rod was born, and my desire for Bug is that if something happened to me, my family gonna be straight. I don't care what my wife do with the money. I don't care what Bug do with the money. I don't care. What won't be able to be said is that Rod didn't leave his family taken care of. I'm doing what the Bible say, where it talks about how a good man leaves an inheritance to his children's children. And let me help you. Just by me showing you the dime model, I just showed you that $25,000 won't leave an inheritance to your children's children. $100,000 won't leave that inheritance to your children's children. So you've got to make up your mind about how you want your legacy to be remembered. Now, with that being said, let me educate you and show you how the wealthy do it. Now, there's a wealthy family in America that goes by the name of Rockefellers. And what the Rockefellers did is they have used life insurance to make sure that they not only just pass on generational wealth, but they've also used that to help that fund businesses that come from their family. That's how their name stays relevant. Be honest. When was the last time you heard of a Rockefeller doing something? Just when? When was the last time you actually heard of a Rockefeller actually being relevant in the news? When? I'll wait. So what's happening is we want to educate you and show you just exactly how one of the wealthiest families in this country actually does it. So let me share my screen real quick. So the Rockefeller formula is what it's called. And what happens is the Rockefellers use an overfunded life insurance to grow money. And not just grow money, but the money is tax-free. Now, you've heard me talk a lot about life insurance policies and things of that nature, but I'm going to show you exactly what the Rockefellers do. So any new child that is born into the Rockefeller family, within the first week or two of their birth, they're going to get the bare minimum of a $250,000 life insurance policy. Now, I know y'all see the commercials on Gerber, and Gerber's like, yeah, you can get this one for $4 or $5 a month, and this, that, and other. And again, I understand if that's all you got, that's it. But here's what I want to challenge you to understand. And I hope that after you see this, you'll be like, man, I've been tripping. But watch this. So for a newborn baby to get a $250,000 a month policy, the premium would be about $63 a month. So annually, you're putting in about $755 a year. Now, these permanent policies are designed to be vehicles to allow you to overfund the cash value. So watch this. So just by paying the premium, not by adding any extra money, What happens is this child, by the age of 18, actually will have about $14,000 in cash value. So guess what happens? With this $14,000, now the family is able to, let's just say, buy them a car. Want to get them something for college. I mean, whatever the case may be, you're able to pull from this money here. It's tax-free money. Again, you can pull it as a loan and pay yourself back, or you can pull it and you don't have to put the money back. Does that make sense? So that's just paying the policy. Now, let's just be honest. Most folk, this is what they do because they're just like, well, shoot, man, because they look at life insurance like it is a bill. And what we're educating people, what generational wealth builders, we want you to understand that this is an investment vehicle. So let me show you why I say that. So this type of policy allows you to do what we call an overfund. And with the overfund, what it does, it allows you to be able to put up to this 4237 in this specific example. It allows you to be able to put up this amount of money into this policy every single year. Let's just say overfund. It's really not an investment because, again, when you use the word investment, there are tax implications. But what the Rockefellers do and the wealthy families do, they get these kind of policies and they overfund them, meaning where the annual premium is $755. They actually add more up to this 4237. Now, let me help you. You can't go over this number because you start going over this number, you're going to mess around and cause this vehicle to become taxed, right? You're going to lose the tax-free status on it. So that's why you got to be very careful about what this is. You got to make sure that you sit down with an expert that can help make sure you structure it properly. Now, let's go to the next one. So let's just say this family overfunds this policy every single year. Now let's look at the difference. Now, when little Johnny is at age 18, little Johnny now has $134,000 that can be used to either A, pay for his college. If he goes to a trade school and wants to get a truck and become a plumber or do HVAC or whatever the case may be, you can give him the startup money right here. All of this came from a life insurance policy. All of this because these family, this wealthy family decided that they were going to utilize life insurance and the tax benefit that it has to create tax-free growth right there. That's what they do. That's how the Rockefellers have been so successful. May I also add that not only do the parents get a life insurance on the policy, on the child, but the trust will issue a life insurance policy for the child. And let me tell you about that. Let me tell you what that be like. So what happens is one of the Rockefeller children can literally go to the family trust and say, hey, what's going on, folks? I have this business venture and I'm going to need some startup money. And so with that being said, what they can do, they have to go to the family. They take a business plan. With that business plan, they say, this is what we plan on doing. This is how we plan on paying the family back the money. That's how the Rockefellers have stayed relevant for so long from a financial standpoint. Right there. But here we go again. All of this comes from understanding that you have to make sure that you have the right amount of life insurance, right? Again, we pray nothing happens to the babies, but guess what? If they have the right policy, if it has the living benefits, then guess what? Then the death benefit is going to pay out while the baby is still alive. God forbid, heart attack, stroke, cancer, get diagnosed with something where they cannot complete 2 of the 6 activities of daily living for a period of 90 days or more, they're going to pay out. Period and point blank. That's how the wealthy do it. That they see life insurance as an asset, where most time we see it as a liability. We see it as a bill. And it's because we don't take the time to understand the power of life insurance. Life insurance is such a beautiful tool. that if people really just took the time to get to know about it, can I really be honest? It would be way more life insurance agents than it is truck drivers. I'm telling you. It'll be way more life insurance agents than realtors. And that's why a lot of realtors are now starting to come over and do life insurance because they see the value. You protect the family, you protect the interest, right? We have a policy that if you're getting ready to buy a home, again, you're going to get that mortgage insurance, but what if we could get you one that would give you your money back once you finish paying on it? Yep, we got that too. So that's the whole point. The point of generational wealth builders is to educate our community, educate our friends, family, and loved ones that you don't have to be poor and you don't have to pass on poverty to your next generation. My prayer, and it's not a selfish prayer because it cuts my heart every time I see a GoFundMe. It cuts my heart. It does, because I know, again, firsthand what families go through when you lose a loved one. Oh man, listen, let me transparency. Losing Lil Rod, man, I didn't know what to do. I didn't know, man. I felt like my world was ending. Because again, as a man, as a father, it doesn't feel right having to bury your child. I'm being honest now. I'm being honest. But also because we put our children on a pathway for success where we made sure that they were properly insured. We made sure that at the end of the day, they knew how to make their insurance policy work for them. When Lil Rod passed, the life insurance came in and we were able to grieve properly. We didn't have to worry about going back to work. We didn't have to worry about none of that. We were able to be able to grieve. We were able to be able to go. We were able to be able to do what we needed to do in order to process the loss. And we're still processing. But what I want you to understand is you've got to make sure that you understand the value of life insurance. Listen, some of y'all may cut me off on this one, but it makes no sense for your child to have $1,000 phone, $500 phone, $800 phone, and they don't have a life insurance policy on like I just showed you. It doesn't make any sense. I just showed you how the wealthy do it. It makes no sense for you to spend all this money on criminal and sweet 16 parties, and you don't have a life insurance policy where at the age of 18, you can hand them $100,000 check and say, go be great. It doesn't make sense. We're putting the cart before the horse. And that's what we're here. That's what we want people to understand. That's why I'm super proud of the agents that we have out there, the generational wealth builders that are out there. And listen, we're not offensive. We just want y'all to hear us. Because here's the thing, the truth stings. The truth stings, right? When people don't love you, they won't tell you the truth. People that don't love you, they won't tell you the truth. They'll just, man, I ain't doing, man, I wouldn't do that either. What? No, we're going to tell you the truth, because when calamity happens, you can grieve much better when you're not worried about money. Come on, every wife. I mean, listen, let me talk to every man right now. Every man. You don't want your wife to have to try to figure out what she gonna do after you're gone, bro. Come on, man. Come on. What kind of man are you if you're not making sure that your family is going to be taken care of in your absence? And don't give me this job, well, she ain't finna be with no other dude, blah, 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 blah. Would you be with another woman? Right? Stop being selfish. That's selfish and it's foolish. Those are your children. That's your wife. That's the one you stood before God and said, you know, I'm going to take care of to death do us part. But here we go again. You have to take care of her even afterwards, because the Bible says a good man leaves an inheritance to his children's children, to your grandchildren. So that means you can't leave your wife out. You can't leave your children out. You've got to leave an inheritance for them. So you got to make sure that your family is taken care of, right? Ladies, again, we need to make sure you're protected as well. Again, especially with so much happening now, ladies, good God Almighty, you know, I feel so bad. I know they had the sister strut today in Memphis, you know, talking about cancer awareness and all this, that, and the third. And I'm glad for that. But here's the question that I have: why do we wait until we get cancer before we start looking at life insurance? Right? Again, why do we wait till then? And here we go again. I educate people. I don't judge nobody. But the life insurance that we have with our living benefits, if someone does have cancer, if someone does get breast cancer, baby, you can get up to 80% of your death benefit while you're still alive. So the time you have to take off work, you got money. You get the money up front. Come on. Why would that not be something that you want? Why? And then let's just talk about the children. You know, when children are processing grief, we want to make sure they're protected as well. Because again, you know, and this is not to be doom and gloom. This is just talking real, and I'm gonna get on out of y'all way. But now young people are dying at a faster rate than older folk, and parents are not properly protected. They don't have their children protected, and now, you know, you're grieving the loss, but you can't properly grieve when all you have to do is take a page from the Rockefellers, take a page from them, and basically make a decision that poverty is going to end with me. Poverty stops right here with me. And so that's what I wanted to talk about tonight. Make sure that your family is properly protected with the right amount of life insurance. Again, it's not so much having a $20,000 policy, blah, blah. That ain't nothing. That ain't nothing. The funeral home gonna eat that up. Okay, I'm just telling you. The funeral home gonna eat that up. There's so many different fees that come when someone passed. You got to make sure you have enough life insurance. We got to stop. Let's hashtag in GoFundMe. How can we do that, right? And that's what I really dislike about GoFundMe. Beforehand, folk would have a little piece of life insurance. GoFundMe came, and now it's like it just made it popular to not have no life insurance. But let's make sure that we end up putting that to shame. Let us make sure that we're having the hard conversations with our loved ones so that we can make sure that they're properly protected. Because remember, in my closing, life insurance is the sweetest love letter from the great beyond. And it also works while you're still here. Well, listen, I'm your man, Rod Hickman. I'm super excited about what we have going on. Next Saturday, 2 p.m., I will be in Union City with our new up-and-coming superstar, Mr. Ozell. Watch out there now, Frazier Jr. Super proud of that young man and what he has going on and how he's out there pioneering his own office, and he's developing him a team. And so we'll be out there next Saturday. Going to be at the Hampton Inn. So check my page for the fly. I'd love for you to be able to come out there. Love to be able to chop it up with some of you all. And again, remember, knowledge is not power until it is applied. You can have an 18-wheeler truck filled all the way up with gas and revving it all the way you want to. But until you apply that clutch and put it in gear, that truck ain't going nowhere. Look, y'all have a good day. God bless you. Make sure y'all study y'all Sunday school lesson so y'all can be in church in the morning. Take care. God bless and bye-bye.